to have around 745 billion. That's not, that's not little numbers. That's big numbers. And if you look at forward earnings basis, these stocks look really, really cheap right now. I think the gap between Max 7 and the S&P 500 is the narrowest it's been since 2023. So I think to a point, these stocks can only fall so much where they become attractive again.
I want your take. Obviously, we had the SpaceX IPO not long ago. First time I've seen you since that.
Yes.
We have OpenAI. We have Anthropic preparing to go public soon. Does that create another leg of demand for the chip makers? And how are you mentally thinking about these massive IPOs in the pipeline?
When SpaceX went public, I was glued to my screen watching how it would turn out. And it was a great public offering, right? We saw it just go up to the moon, quite literally, launch to the moon, right? But I think it's been kind of a flop since then. And this is when we haven't even seen the lockups expire. So to me, this initial weakness is concerning. Granted, most of the IPOs, they don't really do all that well in the first year. So I think a lot of retail investors sat this one out, at least my friends sat this one out, because to them, they would just rather wait until it's down more. Now with regards to AI demand, I think for me, I think if you think of SpaceX and XAI inside of it as an AI company, to me it doesn't really look all that attractive as an AI company. I would rather buy OpenAI and Anthropic because they're pure play AI, right? And XAI, it's just not doing all that well right now, and I think that SpaceX satellite business, that's great, that's amazing, I just don't think these businesses mesh well together.
I got less than a minute left before I let you go. How are you thinking about rotation? It's not just the XLKs and the tech giants leading the way right now. You are seeing some industrials, materials, healthcare gets its day in the sun. What does that tell you about the health and the breadth of the market?
It's been so good to see the market rally expand to include some of these laggards like financials, industrials. They've been doing so well lately. But again, for me, earlier this week, the stumble that we saw because of memory stocks was concerning, right? We have more gainers than losers in the S&P 500 lately, yet the index has been lagging and finishing down on some days. I think that's a concerning sign because I think memory and the Max 7 really need to pull up and do what there's expected of them. Otherwise, it's great to see industrials rally and financials rally, but it kind of doesn't hold much weight over the broader index. They're so small,
The great Hardik is saying, welcome back to the show, my friend, to the moon.
Thank you.
Nice to see you. Robbie, grab your mic. Here are a few of the top analyst calls that moved the tape today. Here on Wall Street, Barclays upgrading Keurig Dr. Pepper to overweight, saying it sees a re-rating for the stock happening. Shares up 15% on the year. Next up, Morgan Stanley. Tag me in that photo, please. Thank you. Morgan Stanley downgrading a firm to equal weight primarily on concerns of valuation. They say it's still a compelling long-term story. A firm up 4% on the year. Finally, Citi reiterating SanDisk as a buy. How do you not at these levels? Lifting the price target to $2,500 a share. SanDisk up 820% so far here in 2026. Howard, we got to talk about Caterpillar. I promised the good folks at home we would. Shares hitting an all-time high, up 82% on the year. Once again, it is the strongest performing name in the Dow in 2026. It now trades, as you see, over $1,000 a share. That's $1,057 a share. And that means only Caterpillar and Goldman Sachs are the only two names in the Dow that trade north of $1,000. It is a key industrial name for the AI data center build out. By the way, for a bit of fun fact for you watching at home, the third most weighted, the third most highly priced name in the Dow after Caterpillar and Goldman, it's United Healthcare, which trades at $414. So you got Caterpillar and Goldman, and then you have everyone else. In part two of this episode of NYC Innovates, Cheddar's own Chris Castellino explains how Edge NYC is setting itself apart in the booming city skyline tourism industry. Take a look.
Hudson Yards invested millions of dollars to build a one-of-a-kind guest experience inside Edge, the highest outdoor observation deck in the Western Hemisphere.
You want to give people the best experience from the minute they step in to the minute they leave, especially in this day and age where people are tied to their phone and pulled apart. They're really looking for great experiences.
The result, 7 permanent indoor environments, each one drawing from the energy, color, and sound of New York City itself. To build something genuinely new, Hudson Yards brought in 3 studios with very different signatures: Moment Factory, Journey, and Soft Lab. The common thread, they all understood New York.
This is a love letter to New York. And so we spoke to a lot of different agencies, I think over 30, trying to find studios and artists who understood like what the vision was about taking New York. The energy, the colors, we're a melting pot, right? But in a new way. And so how could we find things that highlighted what we all love about being a New Yorker? We want things that are able to fully immerse. And we think that screens only are 2D. And so we wanted things that are real. People could touch, people could see the reflection that changes as the time of day. You can never replicate a physical experience.
Softlab, a design studio based in Chelsea, was selected to build 4 of the 7 environments.
I think one of the main things that we really kind of focused on when we started working with the larger team is there's tons of ticketed experiences that take advantage of flat media, digital media, LED screens, projection mapping, and things like that. So we wanted to bring the qualities of those things like interactivity, dynamic lighting, but also make it much more spatial, three-dimensional, and immersive. So we did 4 immersive installations, and all of them combined materiality, space, lighting, interactivity to make a much more, I'd say, immersive, tactile experience.
The installation starts before you even reach the observation deck with Pulse.
Pulse on level 4 is 450 individually programmed light orbs and has nooks for guests to kind of gather as they're queuing. So that one's also interactive. Each time someone steps into a nook, a pulse of white light, which is almost, you can envision as an expanding circle, happens. So when there are multiple guests, it's almost like ripples in a pond. So the idea is guests work together to produce this kind of idiosyncratic symphony of color, light, and sounds. That one, while it almost appears as worlds within worlds like New York City, it's also about being interconnected in many ways.
After the elevators open, you're welcomed into Crystal Cave, a 25-foot canopy of hanging crystals, each one engineered to catch light and cast it across the floor in constantly shifting rainbows.
Here you're in a place where you don't really get shadows from other buildings. So I think that was something we could really take advantage of, is the sunlight as an activator of all the installations.
From there, enter the Kaleidoscope. Described as New York City's largest, the installation pulls guests through a series of rooms where light and color shift in real time, set to original music. The next experience is called Reflections.
Reflections, which is the 220 rotating mirrors, which also have programmable LEDs integrated in 2 sides of that LED assembly. That's just a huge, large-scale kinetic installation. There'll be mirrors hanging from the ceiling and mirrors based on the ground, so those come together to create this kind of waveform. And those mirrors will track guests as they walk in, so the mirrors will face them. And then it also has lighting integrated into it. And then as guests break certain thresholds, they'll also see a pulse of light, and that'll be much more three-dimensional in the space.
And then Infinite City, perhaps the most conceptually ambitious of the 4, a forest of vertical mirror chambers inspired by New York's own skyline.
Is its idea to bring the city actually into the space rather than just observing it, but it was inspired by the tall buildings of New York. So the idea is that you walk into a kind of version of New York, so you get mixed in with the kind of view that you're taking in. But it has responsive LED or programmed, let's say, LED fixtures in it. And so when those are fired, it becomes more transparent, but it produces an infinity box because the other side becomes mirrored. So that also has a resting state and then reacts as people enter the installation from one side. It produces a pulse of light. And the idea is it creates a kind of labyrinthine pillar of mirrors. And then once you pass through it, you get the reveal of the corner of the city, which has a view of the Empire State Building. So, and then as you turn back around, you're reflected into that view of the city with the lighting, with the Empire State Building. So again, it's another case where things get remixed.
Let's do it, folks. Welcome back to the broadcast. Daniel Eberhard joins us now. He is the founder and CEO at Coho, a Canadian digital financial platform. Dan, it's good to see you on this Thursday afternoon. We got to talk about the raise, $130 million. What does it allow you to do now that you could not previously do, Dan?
Thanks for having me. 2 uses of capital. One is very traditional, kind of venture growth, keeping headcount pretty flat in this AI era, but continuing to build the brand and the marketing presence of the organization. And then the second thing and the salient thing is fully capitalizing the balance sheet for the bank. So Canada's a little different. It takes like 5 years to get a bank license here. We have 30 of them instead of 8,000 in the United States. And so this is kind of the last big piece of the puzzle that we needed to capitalize a bank license and then hopefully meaningfully lower our cost of capital and translate that benefit onto our users.
This gives you a valuation of more than $1.3 billion. What does that tell you about just where the general landscape is right now for digital banking?
I think there's real enthusiasm. Obviously, fintech went through, and specifically consumer fintech went through a hype cycle. I saw you talking about a firm earlier. I think that what we are seeing is that these businesses are durably performing with like the efficiency that I thought they always could. And so if you're looking very traditional banking metrics like return on equity, return on assets, they're meaningfully higher than traditional players. And so these businesses continue to get very, very big and maintain, very high growth rates. And so we've seen Nubank, Revolut, multiple $50 billion businesses built. And I think the view of Coho in Canada is, that we're also seeing domestic winners build real scale in every country. And certainly it seems like Coho is well positioned if we can execute well.
Dan, let's assume you were doing an interview right now with a TV host who knows very little about the world of digital banking. It's just a hypothetical. Why is a federal banking license so important, and why is it so difficult to get?
I was there 5 years ago. The truth is, it shouldn't be as hard to get as it is. But that being said, every country has their own policies, but Canada, to their credit, is making it easier to get bank licenses following some misguided policies for a while. But look, the short answer is banks are driven by three costs. And the first cost is your cost of acquisition. And the second cost is your cost to serve. And the third cost is your cost of capital. And so our cost of acquisition and our cost to serve are an order of magnitude lower than the banks, but our cost of capital is 6 times higher. And so with this bank license, we should be able to level that playing field, translate our better cost structure, our higher product velocity into paying some of the highest savings rates in the country. And hopefully as a result of that, millions of Canadians continue to choose us and use us.
You do have millions, 2.5 million, if I'm not mistaken. How would becoming a bank actually change the experience for those 2.5 million plus customers?
Yeah, I mean, there's definitely a few ways. One of them is just the simplicity. So for mid-market Canadians, they don't want to do the heavy lifting of like, are you a fintech, are you a bank? The idea to consolidate those narratives just seems cleaner and simpler. So that's certainly part of it. But the other part of it is we're just kind of constrained in what we can do. Our cost of capital is a lot higher, and that informs the type of loans we can make. And it also informs the kind of deposits, interest rates that we can pay. And so very simply, the way that we think about this is money is our inventory. Banks buy and sell money. And we want to verticalize our supply chain so that we can buy and sell money at a better price than anybody else. And if we do that well, then consumers will get a meaningful bump to their savings rate and also a lower cost to borrow and all the things that our users care about.
Daniel, I am very sorry to see that Canada lost to Switzerland yesterday in the World Cup, but my very best to you, the company. Congratulations on the raise. Daniel Eberhard, founder and CEO of Coho. Come back anytime, Dan. Congratulations.
Thanks, man. Thanks for having me. Appreciate it. Like the program.
Don't go anywhere, folks. Watching at home, we got a lot more Taking Stock coming up live from the trading floor of the big board right after this. That was really good. Shake 'em, shake 'em. Let's do it. Welcome back to the show. Joining me now, Chris Pavlovsky, CEO of Rum Group, here on the trading floor of the big board. Nice to see you.
Nice to see you. Thanks for having me today.
All right, this is a really fascinating one. So for people who think of Rumble as a video platform and are familiar with it in that context, how would you describe the evolution of the business to what you are now?
So it's changed quite a bit. There's been a big transformation, obviously, in the last week with our acquisition of Northern Data. We started in 2013 to try to help the small creator. In 2020, we exploded with growth. In 2021, we took in our first investment, went public in 2022. We're a video platform that was really the tip of the spear of helping the small creator monetize and distribute and express have freedom of expression. And we launched our Rumble Cloud, our infrastructure as a service business in 2024, 2025, and then took in a huge investment from Tether in early 25, and now just announced the acquisition of Northern Data, which is one of the largest GPU estates, AI compute as a service in Europe. So it's been quite the transformation and quite the change, but it's been fun.
So a lot of people will hear this headline, and there's others. There's Allbirds. It's not a direct comparison, but a lot of companies where maybe people are familiar with the legacy part of the brand in one way, and they're saying you always need to be reinventing. What is exactly, from your perspective, going on with the general push in artificial intelligence, electricity, data centers, et cetera, that is forcing the hand of a lot of businesses to sort of reassess and say, hey, there's a new look to our future than we had previously considered?
For sure. So actually, when we went public in 2021, we talked about how we wanted to launch infrastructure as a service. It was existential to Rumble. We needed our own servers, our own data centers, our own places in order to transfer data and allow people to express themselves on our platform. With the turning off by Amazon of Parler, it was existential. So for us, it's always been part of the plan. We always wanted to build our infrastructure as a service, and we took an investment to do just that in 2021. We built and we built and we built, and by 2024, we decided that we can now launch our own cloud services to the public. We were 17% of the US streaming market on election night, and we're not 17% every single day. So with all this excess capacity, there's a lot of room for us to grow and a lot of room to sell that. So that's what we started to do. We launched Rumble Cloud, and then now with Northern Data, all we're doing is adding a jetpack to that cloud business as we go compete with the hyperscalers.
We're all familiar with software as a service. As far as you're concerned, what does AI compute as a service actually mean in practice?
So we have, with the acquisition of Northern Data, we have over 22,000 NVIDIA H100 and H200 GPUs. Companies come to us to lease those GPUs, and we sell it to them. And for them, they're either using that to train their LLMs, their models, or whatever they may want to do. That's AI compute as a service. That's what we're offering.
I'm just about out of time. Where do you see this going next? The biggest opportunities in the general AI infrastructure chatter?
So with the Northern Data acquisition, we actually acquired a site in Atlanta, Georgia that has 180 megawatts of energized power. So for us, that's a huge opportunity. As you see the rest of the market, you're looking at, you can monetize that at about 10 million per megawatt. And for us, it's a completely unmonetized site. We're looking to monetize that. That's going to be the first thing that we're going to try to do. So we're really excited about that and the future potential for that.
Chris Pavlovsky, CEO of Rum Group. Very busy time for you guys. Congratulations on everything. Thanks for sitting down with me. Nice to see you.
Yeah, thank you for having me.
Don't go anywhere. A lot more Taking Stock coming up from the big board right after this. Nice. Welcome back to the broadcast. Time now for the latest headlines in the world of fintech, crypto, and artificial intelligence. Headlines you need for your Thursday afternoon. At this hour, the crypto majors all down. ETH, the hardest hit, down 3%. Next up, Anthropic accusing Alibaba of using thousands of fraudulent accounts in order to access its Claude AI models. This is coming despite the company's decision not to offer the technology in China. And finally, Kraken reportedly in talks to acquire a 15% stake in DeFi lending protocol Ava in a deal valuing the company at $385 million. And now Money 2020's very own Scarlett Sieber is back to explain all of the ways that fintech companies actually make their money. Take a look.
I'm Scarlett Sieber, Chief Strategy Officer here at Money 2020, and this is how fintech companies actually make money, where boring accuracy beats exciting promises. Today, we're going to be talking about Ocrolus, a company that sits right inside underwriting. Lenders don't lose money because they move too slowly. They lose money because they get those decisions wrong. Ocrolus automates the analysis of financial documents. Think bank statements, pay stubs, tax forms. They turn messy inputs into verified data lenders can trust. So how does Ocrolus actually make money? First, per document and per loan fees. Each underwriting workflow process generates that revenue. Second, accuracy economics. Better data reduces defaults, and lenders pay real money to avoid future losses. Third, deep workflow integration. Once Ocrolus becomes part of underwriting, ripping it out introduces credit risk. So here is the key insight. Underwriting mistakes don't show up immediately. They surface months later as defaults. So Ocrolus sells insurance against bad decisions, basically. And that, my friends, is how Ocrolus actually makes that money, by monetizing accuracy where mistakes compound quietly. If there's a fintech you want to explain through the lens that matters, outcomes, of course, let's drop those below, and it just might make the cut. In the meantime, back over to you.
Tomorrow here on Wall Street at 10 a.m., we will get the final consumer sentiment survey figures from the University of Michigan, Ann Arbor for the month of June. That's a big one. We talk a lot about the separation between the so-called hard data and the soft data. What better represents the soft data than this figure tomorrow morning at 10 a.m.? We'll also get the Russell rebalance and your final tail of the tape for today's edition of Trading on Wall Street. The S&P 500 down 0.01%, so close to positive territory. The Dow up, the New York Stock Exchange Composite Index up, and the small caps up as well. Thanks for watching today's edition of Taking Stock. Have a great Thursday night. We'll see you again tomorrow.